Hi everyone. In this video I am going to explain another problem on joint venture method 2 when books of accounts prepared in the co-ventures books. Let us go through the problem. Raja and Rani in a joint venture sharing profit or loss at 4.1 ratio. That means whatever Raja, Rani are the partners, they come together to construct or to reach a particular goal or venture. On the joint venture, whatever the result, either profit or loss, they are going to share 4:1 ratio. Raja supplied goods of rupees 1 lakh. Raja supplied goods of 1 lakh and paid 10,800 for expenses. Rani supplied goods rupees 28,000 and paid expenses of rupees 1,600. Raja sold goods at 1 lakh 84,000 for 5% commission. Prepare accounts in the books of Raja. Here they ask only in the books of Raja. So condition is, while we are preparing the accounts in the books of Raja, we are not supposed to enter the name of Raja. Whatever the transaction he done, if he done regarding supply of goods, we have to return as purchase. If he made expenses, we have to transfer under bank account, and if he sold goods, and it should be transferred to commission account, because in the books of Raja we are not going to enter the name of Raja, but we can enter the name of Rani in the books of accounts of Raja. Now go through the problem. So Raja Rani partners in a joint venture sharing profit and loss at 4.1 ratio, 4:1 ratio. Raja supplied goods of rupees 1 lakh. Who Raja supplied? So instead of Raja name, to purchase account, how much? 1 lakh rupees. 1 lakh rupees. Next, if it is in the books of Rani, to Raja account, right? Here we are preparing in the books of Raja. Next, he paid 10,800 for expenses. Who Raja? So we should not read the name of Raja. So to bank account regarding expense, we have to transfer bank account. How much? 10,800. 10,800. Next, Rani supplied goods of rupees 28,000 and made a expenses of, or paid the expense of rupees 1,600. So we can write the name of Rani. Rani supplied goods. Rani supplies account to Rani account. Joint venture account debtor to Rani account. Supplied goods. How much? How much? 28,000. And she made a expenses of 1,600, right? To who? Rani. She made a expense of 1,600. Expenses 1,600. Next, Raja sold goods at 1,84,000. Raja sold on behalf of joint venture. So by joint bank account, how much? 1,84,000. And he is going to get a commission 5%. Who? Raja sold, right? So if Rani sold, we can write the name of Rani in case of commission issue. But here sold by Raja, so we have to debit the commission account. Commission account. How much commission? On 1 lakh 80, commission is always calculated on sales on 5 divided by 100. 1 lakh 84,000 into 5 divided by 100, that is 9,200. So at last, prepare accounts in the books of Raja. So now each and every transactions were considered, whatever given in the problem. So go through the total. Which side is more? 1,84,000. Credit side is more. Take the balance of credit side to both side. 84,000. From the 1,84,000, you have to deduct 1,10,800, 28,000, 1,600 and 9,200. The remaining amount is 34,400. It should be, it's a profit on venture. Profit on venture, joint venture should be distributed among Raja and Rani. In the books of Raja, we are not supposed to enter the name of Raja. So profit and loss account in case of Raja and Rani account, amount is 34,400 into 4:1, right? 4 by 5. 34,400 into 1 by 5. The amount is 27,520. So I will write here 27,520 to visibility to reach exactly. Okay. Next, 6,880. 6,880 is the. So you should not write like this because of shortage of space. I wrote here, right? Okay, clear. So we completed with the joint venture account. Right now we will go through the Rani account in the books of Raja. We are just preparing in the Rani account only in the books of Raja. In this method we are not going to prepare the joint bank account. That should be keep in your mind. Okay, now whatever the entries given in the problem, each and every entries are considered in the books of Raja, so no need to look the problem. So we straight away go through the Rani account by considering the entries what we are written in the joint venture account. Okay, now we will see one by one. To purchase account, no need. To bank account, no need. To Rani account, to Rani account is by joint venture account. It should be transfer vice versa to Rani account. So it should be credited in Rani account by debiting the joint venture account. By joint venture account, how much? 28,000. To Rani account by joint venture account 1,600. So to commission, no need to write. To profit on joint venture, profit and loss account, no need to write. To Rani account by joint venture account, that is profit on joint venture. Profit, how much? 6,880. The total is 36,480. No entry regarding in the books of Raja. Debit side of Rani account, no entry. So ultimate balance should be transferred to which account? Bank account. Bank account, that is 36,480. This is about the simple problem of Raja and Rani in joint venture in method 2. Any doubts you may ask through the messages. If there is no doubt, probably in next video I may go for next chapter. So if any doubts you can ask through the messages or through the call. Okay, thank you.